Hey guys, welcome back to the channel. My name is Timothy, and on this channel we speak everything personal finance. And in today's video, we're going to do another reaction. I've really been enjoying these reactions and kind of getting a feel on the economy and just a feel on what's going on out here in the world. So this video is from CNBC, which I love to kind of get information from them and kind of see what's going on. Why it's called Why Homeowners Are Struggling to Afford Monthly Expenses. Now, this video is more of a example that I want to set you guys, or something that I want to kind of have you guys know. Now for this video, it's more of an informational piece and not just me coming from the economy, because I want you guys to know how much it really costs to own a house. And then maybe owning a house is not the end all be all when it comes to finances. Because so many times I hear people say, oh, I want a house, I have to get a house, I have to get a house. There's so many hidden costs with owning a house. And I believe that this video will break it down perfectly for me. And hopefully you guys can see that owning a house is not just this black and white thing. It's a lot of gray area, and it takes a lot of finances. It takes a lot of money, and your payment doesn't just stay the same. That's something I thought. So let's get to the video of why homeowners are struggling to afford monthly expenses.
Record high inflation may have people questioning whether homeownership is a good investment. Property taxes on the median single-family home have risen by more than 25% between 2019.
I don't personally look at home ownership as an investment. Like, I don't look at owning a single family home as an investment, because it takes money from your pocket. At the end of the day, it's kind of liability, if I'm being honest, because you're just putting money into an asset. But I mean, I guess you're getting a home out of it, you're getting some equity out of it, but it just takes so much money. It's not really putting money into your pockets at the moment. Yes, the equity will put money into your pockets later on down the road, 10, 15 years from now. But I don't look at it as an asset. And I don't know. Some people call it an asset, some people don't. Like my house hack, I look at it as an asset because it allows me to not pay anything, and I also get paid for it. So that's just my perception on a single family home. I don't think it's an asset.
In 2023. There's also been more than 25% between 2019 and
Wow.
2023.
Look at that
There's
bump.
also been about a 20% increase in home insurance premiums between
Yeah.
2021 and 2023, according to insurance comparison company Insurify.
These are things you're dealing with when you buy a house. You're dealing with raised property tax and raised insurance, and it goes up every year. Your mortgage payment stays the same. The interest that you pay towards it and the actual principal stay the same, but the taxes and insurance go up. I did a video recently detailing that 50% of the money paid towards a house is going to property taxes and insurance. So you can see that property taxes is on the rise. Everything's on the rise. So this is why owning a home is not always the best choice.
Estimates rates will rise another 6% by the end of 2024.
What many have failed to anticipate is the rise in both property taxes, and that's correlated to the rise in the value of their home, something that at some level helps them, as well as the increased cost of paying for that insurance.
82% of recent home buyers said they regret their purchase, with 44% saying they had to take on additional debt to maintain their standard of living.
I mean, just imagine buying this asset. You bought this 200, you bought this, no, people are buying 400, $500,000 houses. You put 20% down to the house. So say you put 20% down on a $500 house. What is that? So you put $100,000 down, your whole life savings, and then you end up regretting your purchase. That is just crazy to me. I mean, I don't regret this house at all, but I know there are people out there that regret buying a house because when they get in the house, they've realized that it's more than they can handle. They realize that the property tax has gone up. They realize that all these things have gone up and they're just not ready for it. So my thing to you would definitely be, before you go and buy a house, be sure that it's something that you want. Like, be super positive, be super confident that buying a house is for you. Do not rush into buying a house because you're tired of renting. Like right now in this economy, I believe that renting is actually cheaper than having a house, because having a house, it has all these expenses, and we're going to talk more about these expenses in the video, but this is just kind of giving you an insight of what it's like out here to actually own a house.
Person may own a valuable home doesn't necessarily mean that they're financially set.
No,
there
it doesn't.
Costs associated to maintain
so many
property.
costs.
Unfortunately, a lot
So
of
many
people
costs
go into
associated with
buying
it.
a home and they don't understand that their monthly payment could change.
More than 1 in 4 homeowners with mortgages spent more than 30% of their income on housing costs, implying they're cost burdened.
Hold on, let's break that down. More than 1 in 4 American homeowners is house poor. When I say house poor, I believe that house poor is majority of your money is going to your mortgage. So maybe 40, 50% of your money is going to your housing payment. That's not the life I want to live. That's not the life I want to live. We just booked a trip to Florida, and I'll talk about this in another video about how we booked a trip and how we're able to pay for it. We're gonna go there for about 5 days, and it is not a financial burden to us at all because we're not house poor. All of our money is not going to this house. I should tell you guys percent of our money that's going to the house. You'll be surprised because we're putting money where it matters. Like, we care about the house. We like living here, but we put in money to vacations. We're putting money to our investments. I cannot be house poor. If we ever move here, I have to make sure that the house we're gonna buy is at least 15 to 20% of my income. It can't be more. It can't. It can't be more than 20%, maybe 25%, but that's it. I'm talking about the payment. I'm talking about the potential rise of insurance because you know that's gonna rise. I'm talking about the potential property tax rise. It has to be below 15 to 20%. If not, I'm not moving. We're gonna trap it out here in this 2-bedroom, 800, 700 square foot apartment house hat because I can't be house poor out here. I just can't. I really will try my best to not be house poor. And if I want to move to a bigger, better house, I gotta make more money.
Housing costs, implying they're cost burdened. Here's why home payments are skyrocketing
Let's
and
see.
how people shopping for a home can prepare.
So this is for you guys. If you're shopping for a home, this is how you prepare. Like, let's watch.
Homeownership is the primary path toward wealth creation in the United States.
Single-family
Yeah.
homeowners accumulate an average of $225,000 in wealth from their homes during a 10-year
But you
period,
can't do nothing
according
with
to
it
a
unless you sell it or
2022
take equity
report
out of
from
it.
the National Association of Realtors.
That wealth sort of boils down to being primarily only on paper, and the time that you cash in that asset is
When you get the
sell
money.
the home.
There's
Exactly.
a saying, house rich, cash poor,
Yeah.
meaning people may own a valuable home, but that doesn't always translate into having cash on hand.
No. I mean, a house can literally make you a millionaire. Like, you have all this money tied up into your house from all this equity that's grown, all the money you put into it, but you can't do anything with it. Like, the house might make you a millionaire, but you might not have that much cash on hand, like just having all your net worth tied into a house. Even us, a majority of our net worth is tied into a house, but we just started building our investment portfolio. So eventually our investment portfolio is going to bring us more net worth than our house does. But yes, a house does give you a lot of net worth because it's just bills and it's money that you never even really had to earn. It just kind of earns itself. That's the best thing about buying a house when you buy it with a mortgage because you don't have to pay $400,000 for a house. You could pay $100,000 for a $400,000 house, and the house appreciates to 500 to 600,000, but you only put 100,000 in. So that's kind of the benefits of buying a house. On paper, you'll be a net worth millionaire. On paper, your net worth will look good, but you really might not have that much cash just because you have a nice house.
There's a saying, house rich, cash poor, meaning people may own a valuable home, but that doesn't always translate into having cash on hand.
Home prices have been increasing over the last few years.
Yes, they have.
Outpaced income for the average consumer. That's a problem because that creates an affordability crisis for the average person.
This can be a problem because as the value of a home rises, so does the cost to maintain it.
Crazy.
Property taxes are one of the costs that can increase with the value of the home.
Man, these things go
Homeowners
crazy.
whose properties were reassessed between 2019 and 2023 amid skyrocketing valuations saw an increase in taxes.
That's me. I got the evaluation. I thought my house payment was going to be the same, $600 some dollars. It was on paper, it was on a mortgage document, $600 some dollars, taxes, insurance included. You're going to be paying that for the rest of this mortgage. You've been paying it for 30 years. Lies. Wrong. Well, no one lied to me, but I wasn't educated on the truth. The truth is, when my property got reassessed next year, didn't have enough money in my escrow account to pay for the taxes, pay for the new reassessed value of the house. So they charged me extra. It's like $100 or $150 more on top of my mortgage. So instead of paying $600 next year, I pay $700 or $750. Something crazy, and it's still not a lot of money in the grand scheme of things. Imagine this was a $300,000 or $400,000 house with a $2,500 payment, and it only goes up from there. It's insane.
The median taxes for properties that were reassessed increased more than $600 for the year between
Oh,
2019
man.
and 2023.
Local municipalities can do these. Each local government has a different form of them in certain areas where they go, we're going to do an assessment because we need to build some new infrastructure for something. And this is how
Just
we're
a money
gonna
pit.
raise
They
the
just
funds
pull
for it. And so that's
from your
another
house.
important thing with your realtor is to talk about Has the town and county been talking about any sort of assessment like this coming up? Have you heard anything? If your realtor says, I don't know, then go get a new realtor right away, because they should be following all this stuff, because they are your advocate and they're your guide.
An expert had told me that property taxes rarely go down, they usually go up.
Yeah.
Property tax increases in the past 4 years varied by state, with New Jersey, Connecticut, and New York seeing the highest average property tax increases, while West Virginia, Alabama, Arkansas, and Mississippi saw the lowest.
So let's move to West Virginia, Alabama, Arkansas, Mississippi. Let's go there. It's probably not that bad. Lower cost of living. You can go down there and find a nice house hack, I'm sure. Good weather.
It's always an option for homeowners to challenge essentially the tax assessment that they're getting relative to their own property. And I've been made aware of, for example, some attorneys that actually are in the business of doing that for homeowners. And I've known of some people who said, hey, what does it hurt to challenge that assessment? I would ask, well, first of all, is it
Money.
worth your time and potentially your money to challenge that?
Hello.
But if you're really in a situation where you think it's unfair or inaccurate, then I think that's where the challenges really do more properly come into play.
Homeowners insurance is the other major expense that can fluctuate after
Big,
a home
man.
purchase. The average annual homeowners insurance rates in the U.S. increased from $1,984 in 2021 to $2,377 in 2023.
This is why I shop for different home insurance, because you can always get a better deal if you go somewhere else and bundle things together. Sometimes you won't, but sometimes you will. But don't feel like you just have to stick to the insurance company you're with because you owe them nothing. You want to get the best deal for your insurance so you can keep your housing payments low. And just seeing here, the average annual cost of home insurance is it's going up. Everything's going up. Taxes going up. Home insurance is going up. Everything is going up. So we need to stay as low as possible so we can continue to invest and put money to where it matters.
One estimate from Insurify predicts average annual rates will rise to roughly $2,500 by the end of 2024.
In the last couple of years, we've seen this spike, this huge increase, and it is because we are having more natural disasters in places. We're having more wildfires.
There's a wildfire going on right now in California. Imagine what the insurance is going to look like over there. I mean, insurance companies are already pulling out of California. Imagine how much home insurance is going to be after these homes get rebuilt. If these homes get rebuilt, it's going to be sky. It's going to go through the roof in California. In places like Florida with the floods, I would love to move to Florida. Like, it's actually like one of my dreams. But just seeing the increase of cost down there from home insurance, property taxes, car insurance, and all these other things, it makes me second guess. So.
We're having more flooding. We're having more mass destruction events, and those have to
Oh
be
my gosh, look at
removed by
that.
insurance companies somehow.
With the increase of hazardous weather, lots of major insurers are leaving areas, and it's not limited to California and Florida anymore. Like, we're seeing that in Colorado and like other areas where wildfires, tornadoes are common.
Those states are seeing the biggest spike in insurance rates, with Florida leading the pack. The average
in Colorado and like other areas where wildfires, tornadoes are common.
Those states are seeing the biggest spike in insurance rates, with Florida leading the pack. The average annual rate for insurance in Florida was nearly $11,000 in 2023, which is more than $8,600 than the U.S. average. Florida
Wow.
states make up 6 of the top 10 most expensive to insure in the country.
There are some states that
It's all along that water, all along that coast, where you got hurricanes and all these different natural disasters that come from these hurricanes. Just bad, These are desirable locations to live, but you're going to be paying a much higher cost to live there.
actually have legislation in place that insurance companies can't raise your premiums more than a certain percentage each year.
Insurance is a highly regulated and complex market, but going without it is not an option for many homeowners.
Homeowners insurance is a necessity for people, particularly those who have a mortgage,
Yeah.
because if anything happens to the house, we need to be able to recover the cost of the damage to the home, particularly if it is destroyed. You need to either do the repair or the replacement of that home.
The cost of repairing a home has risen, which affects insurance premiums.
Obviously, over time, you want to try to make sure that you have the right homeowners insurance,
Yep.
whether you're doing business with the right kind of entity that is best for you, including the kinds of coverage not only for homeowners but more broadly that you want and need. And so we try to control the things that we can control. We try to manage the things that we cannot and try to anticipate, understanding that there's a huge array of uncertainties associated with life and with home ownership. I think this is going to be a space to watch for the foreseeable future simply because it is such a dynamic and volatile and potentially costly environment.
There are ways for prospective homeowners to set themselves up for success.
People who buy today with the assumption that they qualify based on the current real estate taxes or current insurance need to really do more homework to understand
This
where
is
they could
it.
really be in a year.
And this is what I was talking about. I didn't do the homework to understand where I'm gonna be in a year. And I know people that just bought houses in these nice neighborhoods, and I don't even know if they know. I don't know if anyone really knows that your insurance and property tax are probably gonna go up the next year, so your payment is gonna change. So you might think you can afford this $2,500 payment, but in 2 years or 3 years, that payment might be $3,000 because your insurance and property tax has risen so much because you're buying in these nice areas. You're buying these nice neighborhoods that need to be upkept. You're buying these neighborhoods that are gentrifying. You're buying these neighborhoods that are just doing all these different things, which is good for their neighborhood, but it's bad for your bills, it's bad for your property taxes. So it's just finding that median, finding that middle where you're not paying too much, but your neighborhood is also improving.
Homeowners should lean on their realtor first, and you need to look at things like how much your homeowner insurance is going to cost.
Yeah.
Even trash removal, water bills, gas bills, how much
All
did
of it.
electricity
All of
cost
it.
last year? Can I get a history of things like the electrical bills, things that we know we can go back and see? Does your state have any laws that my property taxes can only go up a certain amount each year? That's a great question to ask if you're relocating to another state. A realtor is really important to work with because they're going to be able to answer all those questions for you. You want to leave yourself a little bit of room. Just because you qualify for $3,000 a month in a mortgage payment doesn't mean you should max it out right now. Look for something where you can get in around. You want to leave yourself a little bit of room. Just because you qualify for $3,000 a month in a mortgage
Doesn't mean you have to
payment
get
doesn't mean
that.
you should max it out
No.
right now. Look for something where you can get in around $2,500. If
Yeah.
$3,000 is your comfortable budget, go a little lower than that so that you get.
Don't buy at the highest. If you can afford a $40,000 car, don't go and buy a $40,000. If you can afford a $500,000 home, according to the paperwork, go buy a $400,000 home. I mean, just don't buy too much. Don't do too much, especially when buying a house, because as you've seen, things change. Things don't always stay the same when you're buying this house.
Yourself that room.
Current homeowners who are struggling to meet their monthly payments also have some options.
Start on your county assessor's website. They have a ton of resources generally. If you can't find what you need, ask your realtor because they should be able to point you in the right direction. There are resources available in most states for property tax relief, and so you just need to go and learn what those are, see what you might qualify for. But don't just assume, I gotta quit going out to eat, I gotta cut all these other expenses. There might be a way for you to get some relief on your property taxes.
The Consumer Financial Protection Bureau.
There's so many resources out there. Just look into it. If you're really stressed about your payment, look into the resources you have that your city's offering, that your county's offering, and take advantage of those resources because a lot of people don't know about them and aren't taking advantage of them.
Or CFPB recommends reaching out to the Department of Housing and Urban Development to see if you qualify for any programs or additional help. The CFPB also suggests homeowners call their mortgage servicer to explain why they're unable to pay, whether it's a permanent or temporary situation, and details about their income and expenses. A mortgage lender may be able to work out a repayment plan or provide a loan modification. Homeowners can also consider switching insurance companies if their rates get too high.
That's what I
You
do.
should be interviewing insurance
I've only
companies.
switched
That's
twice.
The biggest takeaway from this entire segment that you're doing is interview everyone, interview a few lenders, interview a few realtors, interview a few insurance agents because they all have different things that they offer and you need to find what works best for you.
So that's the video. Basically, my take on it is be knowledgeable in what you're doing. You should know how much house you can afford and then buy below that as much as possible. Don't go and buy the expensive house. Don't get that expensive payment because you know it's going to go up. I hope you're paying attention from this video because you know it's going to go up. Your taxes are going to go up. Your insurance is going to go up. Just be knowledgeable. Don't just jump in. Don't just dive in, eyes closed. know what you're buying, do your research, and then go and get what you need to get. For example, me, I bought this house sight unseen. All I knew is that I wanted to house hack. I didn't care about nothing else. I was just like, house hacking is for me. House hacking is what I want to do. So I'm going to get this house hack and we're going to make it work. I didn't know that my property taxes were going to go up. I didn't know that my homeowner's insurance was going to go up. All these things were just new to me, but now I know. So when I go and buy the next house, wherever we end up moving, I'm going to ask these questions. Is there going to be a new assessment? You know, how much has the property taxes risen in this area recently? Because I don't want to be house poor. I don't want to have to put all this money to the house. I want to put money to my investments. I just want to live in a house where it'll have enough space for my family. It will be safe. It's just a very interesting video. And I hope if you guys take anything from this video, it's to stay informed and be involved in the home buying process. Make sure you know the ins and out of what you're buying, because you're buying, it's going to be one of the most expensive things you ever bought, a $400,000 house. You didn't put $400,000 toward this house, but you own this $400,000 asset. So you need to know what's going on with it. You need to know everything about it. You need to know how much things are going to cost. You need to know how much maintenance is. All these things need to go into your thoughts when you're buying a house. So hope you guys enjoyed this video. If you did, leave a like and subscribe to my channel, and leave a comment in the comment section about what you guys thought about the video. So I'll see you guys in the next one.